most market participants are not overly concerned about valuation or fundamentals. They never have been, and I'm convinced they never will be.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back. A little cut off there for you there, Chase.
Yeah, just talking to myself about where I'm sitting in my chair.
With another edition of the Daily Dots. This one's going to be a little bit of a earnings / macro data extravaganza. We should have some earnings reports coming in live. But as always, I am joined by the brain trust himself, Mr. Chase Taylor. I would say it was funny, but in this market, I would expect nothing less. You get a negative quarter GDP print and the S&P finishes positive on the day.
Indeed. And at one point down 2%. So
good.
Another, big comeback day. Yeah.
I will sit there and it's usually when I've seen situations like this in the past, I at least understand or see the optimistic other side of it. I'm really having a tough one with that. If you're in there buying up stocks today, I really don't know why. What are you looking at?
I mean, I think it's just, what we've been talking about here lately with, I think you're just getting CTAs getting back in there and buying, and maybe vol control to a degree has put one toe in or something. I don't know. Probably not on that one, but some of the systematic stuff's coming back. I think because we're so far off the blow now, a lot of people probably sold the low and now they're panicking and buying back in, active people. I'm sure the pod shops are rapidly getting themselves back in.
Yeah.
So
yeah.
I think it's just stuff like that.
Yeah. It's just, yeah. I mean, I guess it's not odd because you've been seeing it for so long, but to watch the bad news coming in and to watch again, we've made this point several times, but regardless what you think of the tariff situation, it's exacting a toll. You're seeing the data prints now. You also know that regardless of what's dealt with this, you're going to have more bad data prints. You know what I mean? Like just due to the damage that's already been done.
Yeah, that stuff's just now.
Yeah, that's
the beginning. I mean, even President Trump in his speech in Michigan said, they haven't even really hit yet.
And this market refuses to price any of it in. Like, it's just nuts. I mean, you're still above levels where Trump got elected. You know what I mean? Like it really is fascinating to me. Like, and I hate to just sound like a broken record, but again, the only comp I can give is to COVID, where you're sitting there going, look, I know for a fact what is happening right now does not support any of this, but here we are.
We have been talking for weeks now, like, hey, this is gonna create all this front running that's gonna make some of the data look good. And
they were holding to that today. I saw that. Oh, but don't worry. Look at retail spending. I saw a freaking headline on CNBC, and I'm sitting there going, good God, guys, do some math. If consumer spending is really up 7.5% year over year, how are you getting a negative GDP print? Like I ask yourself that question, right? The biggest consumer market in the world, consumer spending's up 7.5%. You print negative for the quarter. You know why that happened? Because of front running.
Yeah. You can see it on the chart. Like the imports chart is crazy. It's just like, it just goes vertical on imports because we did the giant front running. Now that's what crushed GDP, that the net export part being so bad. So that's something important to note because it's a weird mix because consumption's fine, but net exports were terrible. So we got negative GDP, but next quarter it'll flip where consumption's going to come down, but then the trade deficit will come down big time.
Yeah, but net exports aren't going to jump either though.
But like the trade deficit will dramatically
come down.
decrease.
Yeah.
But you may have a positive GDP next quarter, even though
things are so much worse.
Exactly.
Yeah.
Because if you look at the finished goods, to private domestic consumers, like part of GDP, it held firm at 3%. It's fine. So next quarter, that will probably be terrible, but will be positive just because of the way you do the math on net exports.
Yeah, I'll be interesting to see the way it plays out. I think that unless something were drastically to change here in short order, there's another influence here that I think that needs to get addressed that we haven't talked about too, and I do think it bears repeating that. And look, I'm not saying that I think it's a bad thing that the stock market hasn't gone down. What I am saying is that it is very bad when a stock market has ridiculous prices all over the place, because that means that capital is being incredibly inefficiently allocated. Okay. Now, people might shoot back and go, Zach, who are you to say it's being allocated ineffectively? And I would say, well, I would point to valuations and growth, meaning you've got a bunch of things that don't make any sense. And I cannot look at this scenario and not think about the Fed, right? And the unintended consequences of ZERP policy that ran for over a decade, meaning you have conditioned investors. You and I both know, contrary to the way that we would have it, most market participants are not overly concerned about valuation or fundamentals. They never have been, and I'm convinced they never will be, which is why most market participants get smashed. Okay. Part of the reason that they don't care is because of what the Fed has done. Like, if you want to sit there and go, how is it that the market walked blindly into COVID, right? You got all these market people that worship at the church of the market, the all-knowing, all-seeing market. And it's amazing how the market looked through to that. The market always sees ahead. You're like, well, where was it on January 15th of 2020? Okay. It's doing the same thing today, just looking right past the problem. And I honestly think a big part of that is the Federal Reserve anesthetizing every bit of market or economic pain for over a decade. And did the Fed need to take the actions they did in 08, 09? Yes. But their actions that they
maybe not 10, 11, 12.
No. And what people are like, why does that bother? And I'm like, because guys, what you create, what goes up must come down. If you don't understand that concept at your age now, I don't know how to help you. Okay. But the longer things stay out of check, the longer companies that aren't growing or trading at 30, 40, 50 times earnings, the longer those things stay in play, the worse it gets when they finally do pull back. Right. It's like you're building up the Potemkin village, the fronts higher and higher and higher. And when the wind comes, you're going to have a lot more ruined lumber, right? You're going to have a lot more wrecked edifices that get torn down and blown apart.
And as we've talked about before, the more you lever your whole economy and all your jobs to that market, the more damage gets done, not just to the stock market, but to the whole economy. And I think we saw that, I think they did get spooked by the market and had helped create this recovery, because they recognize, like, okay, we're getting to a point where the feedback loops are just going to be awful. I mean, so, in that way, the put was, a week or two in to this whole thing, because I think, people that know how to do the math on the leverage to asset prices recognize, like, hey, this is actually about to be a huge problem.
Yeah. Yeah. And again, want to enforce, look, I am in favor of levying tariffs on China. Like I've said repeatedly, I would have done it a little differently. I'd have rolled it out differently, but I'm in favor, and I think it's a confrontation that we need to have. Again, it's one that I would like to have on slightly different grounds. But it's the other thing in this country is, I think it's important to look back to the origin and go, look, regardless of politics. And I think this is a perfect topic that illuminates one of the biggest problems that I think we have in this country, which is so often now, again, if you want to make the argument that you think Trump has done this too chaotically, okay, fine. If you want to make the argument that he should have done it, I'd agree with you. I would have done it differently. Okay, but the hard reality of it is the reason we're staring down the barrel of this gun is because neither party did anything for 30 years. And just let this go. Didn't just let it go, promoted it, right? Despite the warnings. If you go back and listen to several guys, Ross Perot comes to mind. There was another guy that I'm forgetting what his name was, but did this BBC or PBS style interview at the time. I'm forgetting what his name is. We should pull it up so we can let the folks have it. But he, at the time of NAFTA, he went on one of these shows for like an hour and just said, listen, here's what's going to happen if you go through this. You are going to hollow out your manufacturing base. And he was 100% right? What we are dealing with is getting turned into a political issue, and it is an apolitical issue because both parties have caused this problem, right? And I do think it is sort of funny that all of a sudden when a guy adopts effectively the playbook from Noam Chomsky in the 80s, Noam Chomsky and his types were out there saying, look, we need to tariff goods to protect the working class and the manufacturing base in this country. And to be fair to him at the time, I thought he was a nut job. Still not a fan of most of his work, but doesn't mean he can't make some good points. Speaking of which, side note, he actually, there's a really good documentary out that Chomsky, I don't think he produced it, but it's about his work and him talking and all this kind of stuff. Requiem for an American Dream. Have you seen it?
I have not.
It's a good watch.
Yeah.
And it's really fascinating. And everybody should go back and watch it and listen to what he says, because this ain't a Republican. This ain't a free capitalist type guy, right? But when those guys are identifying the same problems, right? You gotta deal with it. You got to deal with it one way or the other. So like I said, I feel like we need to look at this in two different lenses of, hey, maybe we disagree with the way it's being done, but something had to be done. Now, again, I'm open to ideas that I personally don't see how you could have approached this any other way than a quote unquote trade war. But like I said, we could have rolled things out differently, could have done different, but the American populace has to understand that regardless, it is better off if we deal with this. If that means that the S&P has to trade down to 20 times earnings, God forbid, right?
True, but you have to manage that decline. That's the way I would say it. Because you've allowed asset prices to become so important and in the whole puzzle, you can let them go sideways for 5 years and that won't blow up the economy.
Yeah.
But if you let it gap down 30% and stay there, that will blow up the economy. So you had to find a way, even if it's just open mouth operations or whatever, to like keep it calm. So what I would say, first of all, Noam Chomsky, he has some good sweaters. I'll throw that out there. But to me, what you can do this without trade war with the opposite side of the whole thing, and that is more the way I think China took the lead in a lot of this stuff, and it's through subsidies instead of tariffs. If you think about, TSMC is breaking ground on their third plant just in Arizona, and that's not because we tariffed, chips. It's because we gave them money to do it at the end of the day, right? And I think one of the interesting things about China's model isn't that they were like venture capitalists, let's pick these 3 companies, let's give them a boatload of money and stuff. It was more like, hey, look, how about 1,000 of you show up? We'll sprinkle some free stuff on you, and then may the best company win. It's kind of the approach. If you look at how many EV companies they had coming into this thing, was insane, and most of them were crap and they went away, right?
Yeah.
If you go back to Detroit, early 1900s, there was 1,000 car companies.
Yeah.
They're doing in a way not capitalist at all because of subsidies, and in a way super capitalist, survivalist, like everyone take your shot at this thing. Let's let all the best and brightest go after it, and if 5 of you will survive, right? So I think to me, you do both. Tariffs, I think, have to be laser focused because, broadly speaking, if you zoom out, like all a tariff is a subsidy for inefficiency to protect a few people while hurting a bunch of people.
Yeah.
So that doesn't mean they're a bad tool and they should never be used. I think they just have to be used very selectively. And one of the better speeches you can find on the downfalls of this stuff is some old Reagan speeches in the 80s. Like, spoke very eloquently on the downsides of tariffs that I feel like we've forgotten, I think.
Well, this is a point that I was arguing from the very beginning, where I was like, look, I don't think and I really don't, and I could be proven wrong, but I don't think Trump believes that tariffs are great like he says they are. And anybody that has a basic understanding of economics would not argue that tariffs are beneficial to economic growth in any way, shape, or form. They're just not.
Right.
They're just not. However, my biggest thing with China is that you have to. Maybe it could have been done without tariffs. I personally don't think so. And I think that to get them, no matter what you do, and this is my point all along, and I don't think that this should get lost. In this trade war, I think that our ire should be far more directed at the politicians that did nothing over the last 30 years than China. Because the longer I look at this scenario, then more and more I sit there and I go, if you look at the posture America's had with China over the last 30 years, I'm kind of looking around going, what did you expect them to do?
I mean, at the end of the day, they just outcompeted us with a great plan, a great strategy. I mean,
and I think to some degree our corporation sold us out, meaning I don't think we were paying. I think that we have been too mesmerized by record corporate profits, which, I think it's really interesting in all of this. Now, technology has played a role, but I think it's really interesting that, profit margins for U.S. companies have always been so steady, right?
Yeah.
Right around 16%, right? Then all of a sudden they're at 25 out of nowhere, right? A big portion of that is due to offshoring jobs.
No doubt.
Big chunk, right?
But at the end of the day, they're just following efficiencies wherever they can find them, which does lead to on the back end to us getting, more productivity, cheaper goods,
for sure,
things that are really also helpful. If we hadn't had all this, a lot of stuff would be more expensive, less available.
Yep.
Less efficient.
But we did something that markets always do. We went too far.
Yeah. I don't think there's really any.
Yeah.
Just if you just look at the chart of labor's share of GDP, call it regular people's share of the economic pie, it's gotten too small because of those profit margins. And that, even if you didn't think that was an economic problem, which would be a weird thing to think, but sure, look, maybe you thought that, it's a societal problem. It's a political problem. Like, you just can't really sustain that.
Yeah. So. And a perfect way to show you, a perfect way to illustrate this point, and to point that, for lack of better term, that there are ghosts in the machine that need to be eradicated. It's that if you just believe what you see on the surface, then what that has to mean then is you don't believe in capitalism and free markets. And what I mean by that is one of the basic tendencies, or one of the basic tenets of capitalism, is that a trickle-down effect. And I hate using the trickle-down phrase because it's gotten so weaponized.
Speaking of Reagan.
Yeah. And it's got, the Laffer curve and all these kind of things, right? The funny thing is, I think if you go back and look at these, I think the reason that these quote unquote rules get overridden is because environments change. And so you might have something that in a certain environment, for instance, I've always loved the debate about low taxes equal higher tax revenue, right? And the reason why I've said that is I'm like, to come to that conclusion, or to come to the conclusion that that statement is wrong, you have to be looking at a certain circumstance. And what I mean by that is there are absolutely times where lower tax rates will engender higher tax revenues. There are also times where higher tax rates will equal substantially lower tax revenues, right? Economies are dynamic. These things are always shifting. They're always moving. They're always changing. But looking back at China, again, the greatest crime perpetrated, well, and this is what I was going to get, the breakdown of capitalism. How is it that that period of the highest sustained margins in U.S. history also happened to coincide with the weakest economic recovery and the longest period of stagnant wages in our country's history? Right? So something's amiss there, right? Because all of a sudden, this mechanism that has worked so well, right, in the United States doesn't. Why is that? Because your means of production have been moved offshore, meaning the system isn't working like it used to, right? And what does that mean? Does that mean you go back to days of yore and you started trying to manufacture string and Cabbage Patch dolls here in the United States? Probably not. But what it does mean is you got to manufacture something.
Yeah, and that's key to me. Like, if the goal is autarky, and I know smart people that think Trump really just wants basically autarky to be like super self-sufficient in most things, like then I think you've lost the plot. And I'm not saying that's Trump's view, because I don't really, I mean, I hope not. But at the same time, like, should we be more competitive in advanced manufacturing? I feel like the answer to that's yes, right? I feel like that seems like a good idea. But at the same time, one of my worries is if you lean on tariffs too much, instead of the focus being on like, ooh, man, China's gotten pretty good at some of this stuff. They passed us on some stuff. Let's outcompete them. Let's go get them. Here's the plan to outcompete them. We're gonna dramatically increase R&D spending. We're gonna incentivize more people to go to college for engineering and hard sciences, and like let's get after this thing, and let's incentivize the most important sectors of this stuff. To me, that's what you do. You like, let's outcompete them. Because if you just be like, well, they're getting good at that, we don't want to buy any of that. We'll try to figure out how to make it here. Then the way I feel is that 20 years from now you're in a situation where you're absolutely going to be getting outcompeted globally by them because they didn't take the less efficient way. It's almost like admitting defeat versus being like, oh, you guys want to compete on chips or whatever. Let's do that.
Yeah. No, I agree with you. I don't. And to me, it's kind of a two-body problem. Meaning, I feel like tariffs are as much an incentive for China to straighten up their act as they are U.S. corporations to repatriate stuff. You know what I mean? Like, you've got to. The other part of that two-body problem are U.S. corporations. You know what I mean? If you think about it, they kind of did an end around on modern economic theory. You know what I mean? Especially as it relates to capitalism and free markets, meaning you've never seen profitability and of a country's economic sector and companies and all. You've never seen it be so good and yet translate so little to so many, right? And you have
there is no trickle down.
There is no trickle down, and the irony is that same and that's what's kind of crazy about this stock market right now, right? The sugar high, the stock market on printed money and all the stuff in COVID, but also this profitability. And it's kind of weird. Oh, we're bidding up. These companies are so profitable. And you're like, yeah, but they're in the process of undoing that right now. Right. And it's just a bizarre setup. And like I said, I agree with what you're saying in terms of outcompeting China. I think the competitive side of it always that's what's made us great, right? Economically speaking, innovation, creativity, right? And in that way, I think culturally, the United States, I mean, unless we continue to keep shooting ourselves in the foot, I think culturally we have like a built-in advantage there. And I think that if we, I mean, we're falling behind a lot. The university system, the educational system.
Half of our unicorns in the last decade, it was not an American-born person running the show. So even a lot of our innovation is coming from people that weren't born here, or maybe were second generation here. So that worries me. And then if you just look at the percentage of our people that go to school for for real life degrees. Like, it's terrible.
See, and this is part of my problem. And this is probably one of the biggest reasons why I am so supportive of what Trump is doing, despite the fact that I would have done it differently. I think, especially due to the wealth effect over the last 15 years, too many Americans are asleep at how far we're falling behind, at how quickly we're becoming not America, right? Our educational system is a freaking joke, and it's becoming more of a joke on a daily basis, while the expenses go through the roof, right? You have developed this extraction economy where everybody is just trying to bleed the cow for the maximum amount of blood and not at all worried about how we're going to feed everybody come winter. You know what I mean? Eating seed corn. I just look at our entire, that's what I see. Culturally, nobody, people, again, right or wrong, tariff, right? People freaking out about tariffs, mark it down, and you look around and go, guys, hey, let me, because I do believe this. Regardless of what you do, if you truly address the Chinese issue, I think it is impossible to do it in a painless way.
I mean, there's no doubt. Like, we're very intertwined with them. They make amazing things for very little money. If you upset that, like, it's bad. And it's not just like, it's just like a finished product you open in a box. It's like, here it is. It's, the tentacles are like, they're in every part of the supply chain. Like, we need them for us to manufacture things. It's not just we need them to manufacture us things.
Yeah,
like, that stuff's important.
For stuff that we're actually building here in the United States, a lot of those components, the majority of those components, in order for us to put it together here in the United States, we're still buying it from them.
The only constructive answer is no kidding, sit down and like come to like a real deal where, like, look, we need you need us. We both know that. Let's start from the places we can agree. Let's start from where we obviously need each other, and let's work back from that. Like, you get a few red lines, we get a few.
That's assuming that they think the same thing, though. See,
but there's no other way. There's no other way, because if not, you'll end up here where you don't trade together, and that truly, as Scott Besson has said, like, that's not sustainable.
Well, here's the other thing too. That
we can't pretend we don't need them.
Yeah. Well, the other thing I will say is that, and I would say this to the administration, or if somebody was sitting in front of me right now, and be like, I'm really hoping you guys are aware of this. I'm assuming you are, but you understand you're going down a road where we can't beat them.
No.
And what I mean by that is, if you're talking extended trade war, they're an authoritarian country. They're going to be able to keep their people under wrap. Meanwhile, our people are freaking out about the market being down 6%. That tells you all you need to know.
38% of Republicans said they were willing to stomach pain from this for more than a year.
38%
of Republicans. Now, if you go out to all Americans, it's 28. So, I mean, you don't get to, now, if you pulled the Chinese population on that, you're probably like 90%, like, yeah, whatever, let's go.
Well, that's because they don't want their ATM cards shut off. I mean, you know what I mean? They still want to be able to use public transportation. So they're not going to be out in public saying that they're not a fan of what X's doing economically.
Yeah, but I mean, I don't know. I don't, that's not how I see it, but
I mean, what's your argument?
I'm saying it's genuine that their people will eat pain in a way our people will not. So if you ask them, are you willing to eat pain for 3-5 years to, withstand this trade war? I'd be like, I think they would be like, sure.
Yeah, but I think that also points to their cultural posture against the United States.
Sure.
Like, meaning they want to win.
I mean, of course they want to win. Like,
they don't want to. They don't want to coexist.
I don't think that's true. I mean, no one has used.
I'm just looking at what they've said, man.
No one has used globalization better. So I think they realize how important globalization is to them, their business model. I mean, so because if they turn their back on globalization, then they actually have to turn inward, and the only way they can do that is to give immense power to regular people. And the Communist Party doesn't want to give immense power to regular people. They want to keep it. And they would have to lose a lot of power, give it back to people by, if you're going to go internal and really go domestic consumption, you have to give the wealth outward to regular people. And I just don't think they want to do that. I think they want to keep exporting a bunch of stuff.
Yeah. Well, I mean, for instance, at some point they got to open their capital account.
Right. But if they open ours, we're basically going to have to close ours. And that's the flip side of the trade war is, if you were in China today, you could make the same argument you're making, like, but flipped. Be like, man, like the last 30 years of leaders have just let America rip us off. We sent all of our capital there. We don't have any of the capital here. Our people have no money. Like, we could be having nice homes and nice appliances and nice cars and vacations and stuff like Americans have, but we can't because our leaders sent all the capital to America, and they wouldn't be wrong. Like,
well,
the
no,
flip side,
but I mean,
the trade balance is the capital balance. Like,
yeah, but we haven't brought we haven't, at the flip side, over the same period of time, we haven't brought 25% of our total population out of abject poverty. You know what I mean? So what I'm saying is, like, if you look at them culturally on so many levels, including where they've come from recently, they're just going to have more of a stomach for a fight, right? Meaning, right or wrong, you would think that the average Chinese person probably bears considerably more, places a lot more credibility, and probably has significantly more respect for the average Chinese politician than we have here in the United States.
I mean, yeah.
Yeah. And one of the reasons why is they've watched 25% of the population of their country be drug out of poverty, while over the same period of time, we've done the same thing in reverse, right? I mean, not 25%, but you know what I mean? Really hollowed out our working class and blue collar, they've taken a lot of it.
I mean, I feel like their average politician like knows stuff about policy and cares about it. I feel like our average politician is trying to see how many views they can get on TikTok.
Yeah, that's another fair point. I mean, you hear some of these comments from these politicians, and you and I have talked about it before, but so many of these scenarios where I hear somebody say something and I'm like, look, I don't disagree with you, but what you said is just completely wrong and nonsensical. You know what I mean? And I've heard it on both sides of the aisle. I'm not trying to level this gun at one side, but I mean, look, another statement of where we're at as a country is I saw, like, AOC's chances of running for president are like increasing, like she's climbing, and you're looking around going, God help us. God help us. And it has nothing to do with her party affiliation. Yeah, I'd feel the same way if Matt Gaetz was in.
Yeah, I just don't want the media like dunk on the other team, and that's why you got popular person. I want an adult that knows policy, understands the world.
You mean somebody that isn't sitting there accusing Israel of genocide and doesn't even know the other two countries that Palestine shares a border with? You mean somebody like that? Did you hear that interview?
No.
Oh my God.
I don't watch this stuff.
No, but she's been so outspoken. Oh, they're genocidal. They're this and that. And the embargo, and they're like, what about the other two countries? She's like, what are you talking about? She's like, well, I'm not an expert. And I'm like, well, you're a member of Congress out there talking about another ally in extraordinarily unflattering terms. It's probably best that Egypt and Syria both participated and helped Israel with the blockades, right? Anyway, it was talking, and again, I'm not saying that she needs to agree with my take or back Israel, not saying any of that, but just I am continued to be amazed, and it's kind of a cultural thing of there was a time where I was asked to go on a Twitter Spaces with Tracy Shugart, right? Who knows more about, she's forgotten more about oil markets than I've remembered, right? And the role she wanted me to play in that was to talk about oil. And the first thing I said is, like, feels like being at a basketball symposium and Michael Jordan asking you to explain the jump shot. You know what I mean? Like, this kind of seems dumb. But the reason I thought that was I was aware of I was aware of the audience I was in front of. I was aware of their knowledge of the thing. And I wanted to come out first and say, look, there are people listening right now that know more about this than I do. And I don't want to put my foot in my mouth, right? Seems pretty normal. Then you look around and realize nobody else seems to have a problem with this, right?
Yeah.
Like, I'm sitting there going, you're an elected member of Congress and you haven't even taken the time to look at a freaking map. And she's hardly the only one, right? I'm not at all saying that's it.
That's the majority, I would say.
They're idiots.
It's just a house of hot takes at this point. I mean,
they're idiots. They're all idiots. Like our best and brightest. I mean, give me a break.
And the best and brightest we do have are the ones you've never heard of.
Yeah. Well, they're sure as hell not in Congress.
Because if you watch, I don't think that's true.
No, there's some behind the scenes.
You go watch some of the live footage on say like a committee hearing on some mundane topic, and you'll realize like, oh man, some of these congressmen are really good.
Dude, you know what's so funny about that?
But you don't know those people.
Look, I'm not saying this. If anybody watches my social media page, you can clearly tell that I'm not trying to optimize followers. Right? I don't have time, right? I truthfully, I don't really care. But it's another thing be aware. If you are following guys on social media, especially for financial information that have the largest number of followers, you're doing this wrong.
100%.
If they have the largest number of followers, they're full of it.
And sadly, there's essentially an algorithm to follow to get there. And it's, it's not a good one. It's not.
Well, and you look, you and I have experienced this, and this is in no way me trying to I've done an entire show talking about the stuff I've gotten wrong before. So, and I know you've got no problem with that either. But this isn't us picking or choosing or trying to down talk or even make. You and I have had exceptionally good calls at very big turning points. COVID was one of them, right? Going into 2022 was another one. This isn't about getting calls right. If it was about getting calls right, the followers would be dispersed way differently than they are, right? The reason that those guys have all the followers is because they pitch the red meat. They feed the ducks, man.
They know how to engagement farm.
Yeah, they're engagement farming. And if you're listening to that for advice, you're falling right into the pit hole.
And politically and financially.
Yes.
And everything. I think even now, I mean, the influencers for like health and stuff, and they will throw out some really banana stuff. But that's what's red meat in that world is like, say something crazy about something that's totally normal in our lives, and this is like the worst thing, you should get it out of your life, but have you tried this?
Yeah.
And it's and if you look at the actual data behind that thing, you're like, no. But that stuff, like it's provocative, so people click on it. And then
I was listening to a guy talk last night and he was deadly serious, and he got this off social media, that he's talked to a lot of naturopaths, and the vast majority of diseases in this country can be fixed just by drinking your own urine.
There you go. Case in point.
And like he was educating people. That's where we're at in this culture, where you're sitting there going,
just need some cayenne lemonade. You're good.
You know what? That would make more sense.
I think that one actually might be legit, but
yeah. Cause I'm like, wait a second. That urine was just in your body, dude.
Your body decided that was all the worst stuff and it needed to get rid of it.
It was just there. So putting it back is going to help you somehow. Look, and please, if anybody knows of a health benefit from drinking urine, because I know urine's sterile and I don't think it's bad for anybody, but for God's sake, I mean, and just.
And the equivalent of that is everywhere in financial media.
In the information age, the financial media is the worst. It is
they'll tell you to drink your own urine too, just with weapons of mass financial destruction instead.
And I am convinced that the reason financial media is like that is a quote that I did coin this quote. But the hallmark of the charlatan is complexity, right? Meaning, and what I mean, it's also where they can hide.
Oh yeah.
Meaning take some of the finance and investing is probably one of the most esoteric, complicated,
it has its own language,
and so nuanced. Like we were talking about, even looking back, one of the things I've learned is looking back through economic history. There are these things we'll look back to, and we'll use this example as proof that this works. Well, what I've learned is, it's proof that works in that environment, right? And and where everybody just goes, well, look, back then it did this, and you're like, okay, well, hold on. It's kind of like the inflation discussion, right? In the 70s, if you hear people talk about it, especially people on the right, it's all Jimmy Carter, right? I don't think Carter did much to help the situation, but demographically speaking, we, the python, were swallowing a deer at that point.
Yep.
Okay. The minute the deer got mid station and the family formation age started
throwing an oil embargo, what's he going to do?
And then also taking the country off the gold standard, right? Now, did Jimmy Carter do anything to alleviate that pain? No. but you were going to have serious inflation regardless of who was president at that time. And, you know, this is somebody that was raised in a, you know, and I'm still very conservative, but realizing that my goal is not to repeat tropes and memes that my team likes. My goal is to get it right. And it is anathema to me how little of that exists, right? It's like the way we determine if we're right or not is based on the amount of likes we get, the amount of retweets we get, the amount of followers we have on Instagram, right? That's like the flex. But the correlation between those guys that have all the followers, you know, I'm not going to mention anybody's name.
Yeah, sorry about it. I saw your face. I was like, don't do it.
I mean, Lumber. You know who I'm talking about?
Yep.
A perfect example where you're just sitting there going, I'm sorry, what? You thought what? And, you know, this is a guy that everybody listens to. Just, anyway, kind of went off on a diatribe there. What else do we hear? News. Speaking of which, have we gotten those earnings out?
Yeah, so Microsoft and Meta both up 4 to 6% at last check on their earnings. Now Meta is at 5.8, up 5.8 after hours. Obviously, they still may talk and ruin it or make it even better, and Microsoft up 6.
Has Apple not reported yet?
That's tomorrow.
Oh, that's tomorrow. Okay, got it.
I don't remember.
Yeah, Apple and Amazon and Meta. Microsoft and Meta. Today.
Microsoft and Meta.
When does Amazon report?
I'd have to look.
Is it this week? I think it's this week, isn't it?
Almost all of them were this week, so I would think. But and I guess I can run through the markets since we haven't done that real quick.
Well,
we're basically flat.
Well, and the one thing that I would tell you is I mean, we don't hold Microsoft, or we don't hold Microsoft, but we own Amazon and Meta. That's not a recommendation for anybody out there. Doesn't surprise me on the Meta earnings.
And Amazon's up 3 after hours as well.
So that would lead me to believe Microsoft announced really good cloud
probably
results. And you know, that's another thing too, why we're selective about the megs that we own. God, not Apple. But the other ones, well, no, because like we point out, you got dollar weakness, right?
They're tomorrow as well, Amazon.
Regardless of what happens, whether you get a recession or not, companies aren't going to quit converting over to the cloud, right? Weaker dollar, you know, you look at the megs that we like that are trading at, you know, Google's down with a 17 handle now on the price to earnings ratio on that thing.
That's insane.
On forward, I think they're down at like 14 times earnings.
There are times where I feel like my PA should just be just Google and I should just move on with my life. But and Sundar came out recently, CEO of Google, Sundar Pichai, and was kind of vociferously attacking the whole idea of a breakup. Either or, though, I'm sitting there going, I mean, do I think it's worth more? Sure, but I mean, that thing at 14 times forward earnings, and to me, like the only reason I saw that it could how cheap they were could make sense is like, well, AI could be a pretty big threat to search and ads, you know, which it could have been. But then you look, like, after they implemented Gemini into the normal browser and they're doing all kinds of add-ons to make that stuff even better, it's like,
dude, it's pretty helpful.
It's crushing it.
Yeah. I really like it. I didn't at first,
and more people are clicking on that than most of the other AI apps. So
yeah, I am.
Yeah, Will sucked at first.
Yeah,
it just made it better.
But all of a sudden, I got to the point where I'm actually looking for that AI read at the top because it's way better than any of the stuff that I'm going to get.
No one cares about the 10 blue links anymore.
Yeah,
everyone just looks at the Gemini and then maybe goes from there.
And then I'll flip it back to Apple. How was Apple's AI rollout? What a joke! I just
so far, to be fair, I
just cannot imagine. And you look at the run up in the multiple. Analysts are predicting 5.5% revenue growth. That's a 33 multiple.
It's not worth the multiple for sure.
The multiple's insane. But I mean, then you start talking about,
and I mean, so Perplexity,
Wingstop.
So the Perplexity app and then their personal assistant that you can use, crushes Siri. So like, you know, They had a huge opportunity to get this right, and they failed.
Okay, well,
it seems like so far.
Yeah, but they could still undo it. Go offer Perplexity 15 or 20 billion. They'll probably make that much off interest off their cash.
But I mean, I don't know. It would be interesting to see if they would, how the antitrust situation would come down on that.
I wouldn't.
Plus, I mean, if I'm Perplexity, I'm not selling for anything close to that.
Oh, I wouldn't. But if I was there's a lot of things I do if I was Apple, but I don't get it.
I would give a blank check for a company like Perplexity. But.
Yeah. One interesting thing today, miners green while gold is down.
And that should keep happening, but
it's interesting to me that it's happened a few times already. Yeah. I can't look, if
at some point the financial results they're too good.
They're crazy.
And pod bros do care about forward earnings estimates and the way they compare to each other. And theirs are going to inflect higher while most other sectors are going to inflect lower.
Yeah.
And pod bros will be like, oh, let me get some of that.
Yep. I still love that. Anyway, we've gone long here. Anything that we haven't gotten to that you wanted to go over?
The only thing I would say just from data to day was a little interesting was ADP jobs. The thought was they would print 115. They came in at 62. So,
God dang, dude, I'll tell you what, it's been a while since I've seen this. Like, again, and just watching the market look the other way, this all screams recession.
It feels like we're probably entering one at the moment.
Yeah,
but I mean, the economic surprise index has actually come back into the positive, into the green. So
that's got to be consumer spending.
And a lot of the real real-time data is still good, but if you know how to think 2 steps ahead, I think it's kind of obvious that if you just front ran, you're gonna do the opposite in the next quarter, right?
But it's the consumer spending bump has got to be what's making there's what else?
And this is where the equity market gets real important. If we keep going higher, then we may miss the recession for no other reason than people are like, my 401k is good. I'll buy this stuff. It has to sustain lower to really have one, I think.
I don't know. What's going on here in real terms versus a trade with the trade war and the tariffs, I think that'll do it. I mean, in real terms.
Yeah, prices are going to start squeezing incomes. Wages are going down, so real incomes become a real problem.
Well, and let's face it, when you see a mismatch like this, it doesn't always happen this way. But typically speaking, if one side or the other, the economy or the market's going to get rug pulled, it's usually the market. You know what I mean? Like, just meaning usually those things do not resolve them. Usually the underlying reality doesn't catch up. People are like, well, it did during COVID. You're like, yeah, that and the 8 trillion friends that helped it along the way. Right. But generally speaking, usually the market, when you've got a big disconnect, and I use usually in kind of a farcical way, overwhelmingly the majority of the time, asset prices catch down to economic reality.
Speaking of that, two that suddenly are oil has been really ugly lately, like horrific this week, and copper has started to roll over pretty hard. So that's 2 things that care deeply about growth. That, I mean, hey, it's just a week or whatever. Like, they're still, there's not like they're giving them away yet, but that's 2 very economically sensitive prices that are saying, yeah, no, we have a problem here.
Yeah. Yep.
So,
and I am a little bit kind of rubbing my hands gleefully about this because, and I'm pretty sure I'm piggybacking off your work on this, but you look at this environment, I will be surprised if we don't get, now barring some kind of resolution or statement out of the White House, something like that, I'll be surprised if we don't get out of this without seeing a four handle on oil.
I 100% think we're going under 50.
And if you can buy some of these good producers with oil at that level, I'm going to be all over that.
Yeah, they've held in really well so far, to the point of it being annoying. Like, I think you're going to have to get to the point where those dividends and those buybacks start getting slammed.
Yeah, you know what? The more you bring that up too, the more and more I think about that, I honestly believe that the investing public is just looking at this the wrong way. They're looking at this as a potential threat that hasn't played out yet. And I don't think you see the negative GDP print. You thought that would have woken some people up. I think that was offset by the consumer spending. But it's just, I think it's very hard to make the argument that the market isn't on the wrong page here. I just think it's looking at all the wrong things.
It doesn't deserve the bounce.
No, not at all. And quite honestly, it probably deserved a little more downside. You know, like if you were to sit there, if we were to grade this situation, and not trying to be over penal, right? But if this was a market that was truly trying to look through noise and price things in, I think this is a market that would be down somewhere between 15 to 25% on the year and would be sitting there going, hey, we're going to chill here because that's still 22, 23 times earnings. That ain't bad. And we're going to wait to see how this plays out.
I think that makes perfect sense.
That would make sense, right? Now, there are people like, oh, it's got to go way lower than that. We live in the monetary age, man. Meaning
7% deficit.
Yeah, and you know the Fed's about ready to cut. You know that seems about right. But the bullishness, the attempt, you know, some of the guys we know, in my opinion, they're letting politics blind them. But some of the guys we know that have been wrong all year, that keep pounding the table, all bullish, and you're looking at them going, look, guys, you know, maybe you're playing a little pop here in the markets, but economically speaking, I don't know what you're talking about.
And speaking of pops, one very notable thing is, now this is super short term, but if you look at a 4-hour chart of the dollar index, it looks like a bit of a head and shoulders bottom and like it wants to go jump up and back into the hundreds. And that might be something that, you know, has some ramifications and that could be interesting.
Yeah, Google's getting a bid in after hours too. The cloud results.
Yeah, I think all big tech got a little jump here.
Yeah, Qs are up 1.13 in after hours. Yep, there we go. Yeah, so you're probably going to see, you know what? I was thinking you'd see a big sell-off Friday or Monday. This is starting to increasingly look like NVIDIA up 3.3 in the after hours. Our day got a lot better.
I think you're starting to increase the odds of going and trapping everyone up higher.
Yep. It's starting to look like
assuming we're trapping, you know, who knows? Yeah. Maybe you get the trade wars off, you know, headline that kind of validates it all. But
yeah, but here's the other thing, and this is why I was saying I think you're right. I think the administration's looking at the market and looking at yields and saying as long as they hang in there, we can hold the line.
I'd be 0% surprised if they bring their rhetoric back up, you know, more and more. I mean, you saw it. So I posted this chart yesterday. Scott Bessent.
It was wild.
He kept saying, going back to April 23rd. So this was like the market bottom, essentially. Well, the second market bottom in a way was when he said the trade war and these tariff levels are completely unsustainable with China. And then he said both sides feel that way over and over. This starting yesterday, he started saying it's unsustainable for the Chinese side. Like we're fine. This is no big deal for us, but for China, this is totally unsustainable. It's like, that's interesting. So the market bounces a bunch. Now it's just unsustainable for China. I think that perfectly captures the situation where market up, we're fine. Market down, like, oh yeah, this is unsustainable.
Yeah, and I think the other thing that you're seeing too here is just, and you made this allusion, the other buoyancy I think you're seeing in this market is just investors terrified to not be long these names.
Yeah, I mean, I get it.
Yeah, no, I get it too. I want to tap them on the shoulder and go, you realize the growth has collapsed for so many of these companies, right? Like you're bidding them up and it's just not there. You know, if you're buying Apple at this, I'll just tell you this right now. You're buying Apple at this valuation, you're going to kick yourself in the not too distant future. It's not going to hold here. It's just not. So whatever. Have fun with Apple. Anything else for you?
No, good to go.
All righty. Well, I'm good to go too. You guys have a wonderful evening. And another reminder, you can get us on YouTube now, on TikTok, on Instagram. Just Google and look for Know Your Risk Podcast on YouTube. That's where you're going to find the video as well. Follow us on Twitter at KYR Radio, at Pinecone Macro. Anyway, you guys know the drill. We will see you tomorrow. Have a wonderful evening. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskradio.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.